we've had a pretty nice sort of snapback pretty quickly. So that's actually a pretty strong sign here. But the question is sort of, you got to see is oftentimes when you sort of do get the rate cut, everyone gets excited and it's pretty buoyant. But then, usually like a week or so later, everyone's going, oh, why are we getting a rate cut? Most people probably don't know this, but Paul Tudor Jones, who made a lot of money in the 87 crash, he was looking at the price action there at the time there, and it was very, very similar to some other periods in the past.
The markets like the news about the rate cut, but then the questions start. Why the rate cut? Should we be concerned about the economy, employment, and the share market? They're the questions that Gary Glover will be looking at, as well as an interesting one about whether 2014 is a better blueprint of similar economic environments and times than 1964. He's had an indication that the market will be closing higher into the year end. A lot to cover, but the man who's done all the research is Gary Glover. Good morning, Gary. How are you?
I'm good, Chris. Yeah.
I always like it when I read your reports and you've dug up an old chart and you've analysed an economic environment and set of times in the past and said, well, it's similar to where we are now for these reasons. And anyway, that's right at the end of the report. So I'm looking forward to that. Before that, there's the trading shares you pulled out this week. But we've got the indices. We've had some decent moves. In your report, you talk about Jackson Hole and that the US may be reducing interest rates, most likely September. And that could start as movement. What does that mean for the NASDAQ, the chart that you've got in front of us? It's quite a wild top end of that chart, top right, quite a lot of volatility. What does the current economic update mean? What does the chart tell you? And what would you expect with the NASDAQ?
Yeah, I mean, you sort of did have that sort of rising wedge there, which is oftentimes a little bit negative there, but then obviously we've had a bit of an overshoot both ways here. So, but look, it is still a pretty buoyant, year, the election year. So, I still think we'll sort of finish the year sort of strong here. But, I do think we'll see a bit more volatility there, Chris, actually. So I just noticed that, we've had a pretty nice sort of snapback pretty quickly. So that's actually a pretty strong sign here. So reasonably sort of buoyant market and volume's pretty solid. So, just might need to see a little bit of a, consolidation under the low, under the high here, or look, maybe just push us through here. I just, I think you want to see it sort of consolidate a bit more here firstly, just to sort of settle a bit. I think it might just need a bit of a consolidation phase there. If it does sort of aggressively go higher here, then you might sort of start to see larger swings, so which is probably going to make it tougher environment to sort of trade here. So we probably want to see it sort of calm a little bit here. But yeah, look, at the end of the day, this snapback's been pretty strong, pretty positive, pretty quick. So I think once you go sort of back over that midpoint, that's always pretty strong sign. But yeah, look, maybe we'll just ride along that little that old wedge there. So, but well, I guess at this stage, still pretty positive, but probably expect some sort of consolidation there shortly, I think.
Okay, so that's the NASDAQ, tech-heavy NASDAQ, broader S&P 500, more of a barometer of the US economy. Still something similar, however, it is in closer QE to the recent highs and well and truly above that wedge that you were talking about the NASDAQ had. So would you expect more of a consolidation under or around the high? Would you see it to be a bit like a magnet and go back to the highs and retest it? What do you feel happening?
Look, I think it is a big level there. We obviously got a reaction there last time there. So yeah, I actually think you might get a little consolidation here just under the high there. Maybe you'll get that little David Ryan sort of, a few bars here, just sort of consolidate in the high here. So I think it's a sort of strong sign that we've bounced back so quickly, but I do feel like you just might get some sort of consolidation here, that's all.
Okay. And the Australian index, a whole lot more exposure to the commodity cycle, and we do have a very different chart, but we are sitting in churn, while volatile, above those highs that we had in that similar period. So if the US were looking back to the highs that they had early July, well, we haven't got past our July highs, but it took us a while to get through these sort of March, April highs that we're sitting above now.
Yeah.
Is there much of a difference in the Aussie market?
Yeah, look, it's definitely heaps messier. So, yeah, obviously we had that little tightening up phase there, and then we broke through, and then we've come back and retested the whole break zone again, and then bounced pretty sharply there. So, look, I guess, we have had sort of some strong signs of sort of buying those dips. So that did eventuate on the last retest there. So I think we're sort of holding that level is still pretty positive there. Just might get a bit messy here. Some of the sectors look a little stretched there. Other areas look sort of pretty interesting. So hopefully we'll see that sort of rotation maybe continue there. But yeah, it'd be nice to sort of see a bit more consolidation there, just maybe price tighten up a little bit and sort of settle. But yeah, I still think it's still fairly constructive, I guess, overall.
Okay, so fairly constructive market setup. The Dow Jones, more similar to the Aussie with the, S&P 500 more mixture. But this has been pretty strong candles right up here, and this is much closer. Last two times, it hasn't closed anywhere near as high as this. It's sort of had to throw above that 41,000 type level. It got thrown back down at the end of the week. It's closed the week up there. How do you read that movement for the Dow Jones?
Yeah, look, still pretty positive reaction really out of the day. So as much as a bit of an overlapping, so it looks like we have an overlapping top here. I think breaking out of that is kind of positive there. As much as it's come back down and retested the zone there, maybe a little messy there, but we can go through that sort of phase for a bit here. So yeah, I do think it looks pretty positive there. I mean, look, the reality is, Chris, if we got a rate cut coming here in September, which is pretty likely, it's normally pretty buoyant for equities. So normally pretty positive there. The question is sort of, got to see is oftentimes when you sort of do get the rate cut, everyone gets excited and it's pretty buoyant. But then, usually like a week or so later, everyone's going, oh, why are we getting a rate cut? Because, there's obviously a slowdown. And then all of a sudden the fears, start to jump in the market about maybe recession and, whether this is going to be a soft landing or a hard landing is like. So I think, with that, this will get a bit of a, it'll be a bit of a sweetener. Getting the rate cut, everyone will get excited by that. And then, but everyone will start asking questions, why do we need this rate cut? And then, are they going to be aggressive enough or have to be, because obviously the data's getting a little, starting to get a little soft there. So it is great they've got inflation under control, but it's still going to be a bit of a juggling act there. Still, I was going to have to sort of, cut rates slowly here without sort of having inflation sort of jump back here. Obviously the past there, coming out of those high inflation periods of the past have been some of the central banks have been a bit aggressive cutting rates, and then inflation's come roaring back. So have to sort of, so it's going to be a bit of a juggling act here, sort of trying to keep the economy strong, and I guess without sort of poking that inflation too hard there as well. So I think so far they've done a pretty good job actually. So I think I know got some criticism there, but gee, if you go back and look at history, history's shown that the central banks have made lots of mistakes here. So far he seems to be just sort of quite measured and not reacting too quickly here, which is good. So hopefully they can juggle the US economy through the slowdown there. Obviously the rate cuts will just spark the economy a bit more and just give it a little bit of a boost, bit of a relief. But yeah, it'll be you're just going to see, I think, in a month's time there, they'll be talking about, is it a hard landing, is it a soft landing? Do we need to be more aggressive on the rate cuts or not? So the language will be, it'll be going back and forth there. So, so that's why I sort of think you actually, without jumping to the end too much, that the 60-year cycle of the market was pretty settled in that sort of second half of the year. It was just sort of did the slow climb. Whereas I think the environment we're in, I think it's going to be a little bit more volatile there, just because I think the data is going to be good, bad, and ugly, and then market's going to be jumping from camp to camp, back and forth, So I can just see that erratic nature, sort of creeping in. So, I guess that's why I think it might be a bit more volatile. It might be a little bit more like 2014 rather than sort of 64, which was a little calmer.
Right. Well, you've definitely done the research on that, and we'll get to that towards the end. But first penultimate on the list is like to see the companies that you've picked out of the market on the ASX for trading companies this week. Now, ACL, Australian Clinical Labs, we have seen this one before. We've got the 1, 2, 3, sort of those slowing down of that drop, that descent, and then the false break, the FB down here. And then what it's been doing is sort of slowly building higher with what you said is a bit of a wedge. I seem to remember last week you were saying, look, looks a bit more possibly VCP-like on the daily, but we've got the weekly in front of us. What's the update on ACL right now?
Yeah, looks pretty constructive there. I mean, the sector's pretty warm, so we're seeing like a lot of those healthcare names start to have some positive price action and start to sort of break up, and so we're seeing even more sort of Sonic had a good run, Helios, obviously some of the bigger names have been pretty robust as well. So so the sector's definitely looking firm here. I like that overlapping sort of 3-thrust low there. Had a bit of a false break at the lows, started to build here. Now we've sort of had a bit of a consolidation there, a couple of high lows. So just starting to build a bit of a base here, Chris. So pretty good signs there. So I think, might be able to go back up and retest that early 2024 high there. So maybe sort of consolidate around there. So it looks pretty good there. We do have a reporting season here. I think it reports end of this week. So sort of something to be mindful of. But yeah, I think overall looks pretty constructive there.
All right, so that's ACL. The next one in your list is CCP Credit Corp. You have talked about this one before as well. It looks like it's conforming nicely. So this congestion that we see here and this sort of movement, now borrowing a phrase from something that you've talked about in other videos, is the accumulation cylinder. Possibly not the exactly same thing that we're seeing set up here, but that's that kind of compression. You like to see sort of that compression in volatility and a bit more conforming nature, which can that lead to a positive breakout when we see it sort of tighten up?
Yeah, that's right. So it has been a bit dull so far. So I thought, did report well, a bit of a positive update. Market was probably expecting things to be a little worse there. So did get a bit of a boost, has sort of come back, retested there. So the whole thing's been pretty tight. The volumes have been pretty light as well through then. So just one to sort of keep an eye on here. I think if we can sort of break through the top side here, break above a little short-term high around 1608, that'll be positive there, but has been pretty lightly traded here, pretty sideways oriented. So it might stay like that for a little bit there. But I think if we do sort of push through a little high there, that'll be one to sort of follow here.
Okay, well, another one in a different space, MA Financial Group, MAF being the ticker. We've seen this one, if we're looking at the chart, the weekly chart, we've got 2022 on the left-hand side, current date 2024 on the right. It seemed to be coming into this period somewhat volatile and then getting a bit more muted. However, it did have that impulsive move down with massive volume at the start of 2024, sort of almost last reporting season. And then it seems to have sort of compressed in volatility, come down with a lower probe, and then huge range with a bit of a higher volume quite recently. Is that reporting season? What does that signal to you?
Yeah, it's funny because I was actually watching Intelligent Investor presentation there last week, and they were sort of bemoaning some of the reporting season and some of the stocks there. I was looking at Combank on crazy multiples, where some of the other growth stocks they were talking about. So MA Financial and actually Aussie Broadband were two that they were in particular thought looked pretty undervalued compared to some of the high valuations in the market. And it's funny, a good call by them because they both reported pretty well and both sort of gapped up here. And there is a bit of growth in there as well. So I think those guys were, they kind of referred to MA Financial potentially could have the same sort of growth as like a P&I, which has had a few good years there where it sort of doubled their growth, grown pretty strongly and grown the dividend there. So there's definitely one here that definitely has reported pretty well. I think MA Financial's sort of a lot of ex-Moelis guys as well. So yeah, just one that looks pretty good. Looks like a big base here, Chris, as well. That's the constructive thing on the longer term. And just starting to see a few high lows in there. Definitely saw some tight price action there and a bit of a jump there. So definitely one here for not just the sort of short term there. This could be a good long term one as well. So I thought it was sort of worth actually getting a little parcel here, bit of a starting parcel. Maybe it'll tighten up, consolidate again, but yeah, I think this looks pretty constructive overall here. I think the fundamentals look pretty strong, and got a big technical base there as well. So, got to say that the bigger the base, the bigger the move a lot of the time. So, yeah, it's literally like a 2-year base here. So it looks pretty constructive overall.
Well, going into a completely different space, Lynas Rare Earths, LYC. You've talked about rare earths in the last couple of weeks a little bit, showing up on the launchpad and a few other indications coming through on the market. Bit of a base in the similar sense that volatile towards the left-hand side of the chart on the weekly, and it seems to be just slowing down with volatility. I note here you've got these horizontal lines which seem to be sort of lower highs. Does that have significance into where we are at the moment and how confident you feel with the move for Lynas?
Yeah, I think it's just sort of showed that relative strength there, Chris, as well, where the whole sector's been under the pump pretty weak. This is definitely sort of showing sort of strength there versus a lot of the other sort of mining names, resource names, and obviously in that sort of rare earth space there. So this has held up really well. Well, I think most of the sector's probably gone to new lows. So this has actually made a high low here, and now we're sort of breaking up through a bit of a lower high there as well. So break a bit of a pivot point. So that looks pretty constructive there. So this is definitely showing some relative strength there. When I go and zoom out, look at sort of the longer sort of time frames as well, it looks pretty constructive actually, even longer as well. So this is actually one that looks pretty good here actually. So it's just probably one that any sort of weakness there might try and get a starting parcel here, but any little tightening up here, this is definitely going to be one to sort of keep an eye on there, just because I think it has sort of shown that relative strength overall.
A relative strength is critical, and you've studied some of the best market leaders and seen that as a common theme. One that we've seen before is Block SQ2. You've talking about this sort of, we're seeing a similar pattern here, where these companies have had sort of a drop off and almost 2 years of sort of base building formation. What's positive about what we're seeing with SQ2 or Block at the moment? What's happening here?
Yeah, look, I just sort of like the last little low there, we definitely saw volume step up there and saw some big, like accumulation sort of style sort of stepping in there. It's on a pretty low multiple here too at the moment. So, and the sector, I mean, we're seeing sort of have a pretty good move here. Zip obviously pretty robust. Even sort of Tyro reported as well. So just the whole sector there sort of definitely showing a bit of strength there. So so this is sort of held up pretty well there. Sort of not quite hit the bottom of the base here, but definitely sort of holding above that 90 price line at the moment there. Just like the fact that we had some pretty good volume there. Stocks pulled back in the range a little bit there. The volume just dried up there. There was no volume there last week at all on that little pullback there. So yeah, I think this looks pretty constructive there. I was still trying to sort of maybe sneak a little parcel under 95 there potentially. Still might do a little bit of work here, but I think overall this looks pretty good there. Just the sector definitely is remaining pretty firm here.
Nice. Well, you did mention Tyro, and you've got it in this week's report, TYR being the ticker. We've talked about getting narrower and narrower in the volatility channel, and this is a great example. 2023 just seemed getting tighter and tighter. Well, it did progressively get lower. It got lower at a slower rate. Yep. And then, well, is it possible we might have edged down a low, or what's happened here in the July period?
Yeah, so you got a VCP on the weekly there, and you actually, can't see it here, but the daily's actually been tightening up as well. It's got a VCP on the daily there. So I think we've actually broken above the little pivot point there on the daily and the weekly. And that's a pretty good sign there. I was looking for a bit more volume there. I think it's been like the daily chart has looked really constructive. But we haven't seen the big volume come in, but sometimes we start off a bit slow and then maybe we get a jump there. So we did report yesterday pretty well, has had a bit of a jump, bit of volume there. So I think that's a pretty good sign there. So I think if it sort of holds here, it'll, should be pretty buoyant for it.
All right, well, the Tyro is looking quite positive. Now we're looking back at the 60-year cycle and the 10-year cycle. So just a bit of a recap. Those who have asked many questions before, and the 60-year cycle, let's see if I get this right, Gary, so I've been listening for a little while. we wind back the clock 60 years, so 60 years prior to 2024, we've got 1964. So that's a 60-year cycle. Let's review that chart and understand if we can learn anything from what happened 60 years ago, and if that tells us what happens today. And the 10-year chart, let's look back a decade ago. So 2014, and what happened March, April, May, June, July, were there highs, were there lows? Can we learn from the patterns of 10 years ago, and do they repeat today? When you'd first mentioned that to me years ago, almost a decade ago, I thought you were a little bit insane. Even the success that I've seen you have, particularly throughout the COVID period, and picking the highs and the lows within a day or two, that was quite phenomenal. So I'm giving it a lot more credit than I definitely did the first time you mentioned it to me. But is that how the 10-year and 60-year cycle work at a very high level?
Most people probably don't know this, but Paul Tudor Jones, who made a lot of money in the 87 crash, he was looking at the price action there at the time there, and it was very, very similar to some other periods in the past. So they do a lot of analysis and look at previous sort of markets and see how they shape it. And oftentimes you can get a market which acts pretty similar and has the same type of move, maybe the same percentage moves over certain time stuff there. There was a lot of similarities, I think, between might have been the 29 high and another high. And yeah, they were sort of coming up with a strong close. So even guys like that were looking at cycles a long time ago. And if you know, Paul Tudor Jones spent a lot of money in the 87 crash. He was, one of the guys that really cleaned up that period there. But just studying the previous cycles of the past. But I know looking at like a lot of game guys look at the 60-year cycle as often referred to as the master cycle. And I find it, it can be a little bit hit and miss there, but I find it probably around 75% of the time there, it can be really useful roadmap. So it's sort of like it says in terms of like if you look at the highs and lows in terms of the monthly highs and lows, I find it really useful. And I think sort of the last sort of the commodities boom might have been I think prior to 07 and stuff there. That was really aligned with a 60-year cycle to the point where we're finding highs and lows like same months 60 years apart. So it can be quite useful there. It's been a really good roadmap here out of the 63 and 64 sort of moves here so far, even to the point where some of the days have been only a few days apart in terms of swing highs and swing lows. So just been been pretty reliable here so far. So, but the thing about the 60-year cycle is sort of saying from the end of August up until the end of November, we just sort of have a bit of a slow climb here. So we look. Maybe that's a good roadmap. Maybe obviously with interest rates starting to sort of cool off here now, markets obviously had a pretty strong run. Maybe we're just going to climb slowly here because we've had a pretty strong move, so it's going to be hard to go straight up like we've done so far. So look, maybe this is still a pretty good roadmap there. But just in the past there when we sort of had that juggling in a rate cuts recession, that's probably a period where I was probably seeing greater volatility. And I noticed that oftentimes, apart from the 60-year, the 10 and 20-year cycle are the other cycles to look at. Obviously, your election year cycles and your seasonal cycles are pretty important. I think the election year is obviously one of the big ones, but just notice that sometimes the 10 and the 20 years, so they can be we can run pretty similar to what happened 10 years ago. Is the other sort of big one here. So I just noticed that it's a pretty similar setup actually. So it had the October low, it's had the April pullback, it's had a July high and an August sort of low here, go back and retest the high in September. So this is just one that's pretty interesting there. Just what this market does is actually broaden out a little bit. So it actually expands and does a bit of a broadening sort of top there, which is a possibility here because we've been flying pretty hard. We're not seeing any weakness so far out of this August low. So the 60-year cycle sort of pulled from more of a consolidation. So maybe we're going to run up into the equinox here, 20th of September before we sort of cool off there, which is quite possible there. I think we've got the video coming up in a couple of days' time here. Obviously, US market's still pretty buoyant. When you go back and retest, go back to the high this close here, you normally don't get this close without going through it. So often, if you're going to sort of go back and maybe fall short of the high there, you tend to sort of fall short a bit further. So just looks pretty buoyant. So I just thought this is probably one just to keep an eye on there in terms of how the US market sort of operates there. Nash still has our sort of our end of year sort of strong finish, but does come with a little bit more volatility there, which is, I think, more quite possible just based on what is taking place at the moment. So, yeah.
Well, they're really good insights and helpful to really map out and understand how it was in the years previously. We can say, well, I'm going to start loading up in the October low, probably about the first or second week is where I get a feel that in history, it's when I'd load up, and you did that before coming out of the COVID years into the run that we've had, and then showing presidential cycle, it's been the strongest period of 14 months, been the best period in that whole cycle to get long and stay long. So that's what you've got set up there. You're looking at the 10-year cycle, the 60-year cycle, and obviously you're working the two of them at the same time, right? You're reviewing both of them. Sometimes they'll line up, sometimes they'll contradict each other. So how do you interpret when there's something lining up versus something contradicting? Is it sort of like a stronger signal versus a milder signal, or how do you weigh those up?
Oh, I just don't think, it's just like, it's like trading, Chris. You sort of can't get too fixated, on your view there. So just got to see how, just have I just look for a couple of, I look at the sort of seasonality sort of cycles. I look at the predominant cycles there and just sort of see how it plays out here. So, I mean, to be honest, if you just follow the 60-year cycle for the last couple of years, that would have been a great guide. Would have kept you would have kept you in the right time, and, would have stopped you from getting out too early as well. So it's been a pretty good proxy overall. So definitely got to respect that here at the moment here. So, but, if it's just something a little bit different there, just the climate there with rates and stuff there, just makes it a bit interesting. So, just got to keep an eye on that, I think.
Well, that's the way to take the week forward. We've got some trading shares, we've got insights on the rest of the market, and it's a good idea of the indices. Gary also looks at market leaders every Friday. There's a whole list of the top 30 momentum companies and the launchpad stocks. Link on the screen there. See you next week.
Thanks, Chris.